The tremendous three propelling us past the Kuiper belt and into the void. Microsoft, Nvidia, and Meta. There's going to be a cage match between Microsoft and Meta to see who gets to lead the acronym. I keep it as Microsoft. And no better place to look at the performance than in this QTEC ETF for the equal weighted NDXT index, the Shanghai Momentum Indicator, and the ATM trigger. We'll start looking at the trigger down here in November 2018. You can see it hit the bottom, so this is ATM pressure up, even though it's down here, because there's only one place to go when you're completely down on the floor. If you're alive, you're getting up. So pressure made its big move here in February 2019, and you can see the Shanghai just stayed in the 80 range, and that's really high for that momentum indicator. And then there was another run up here up into the 80s, stayed in the 70s, and the similarities in the current era just came off a bigger bottom to the upside, so pressure made its move here, and it's now pressure down because there's only one place to go when you're as high as this, and that's down. So it's been in the 70s for one day, but high 60s, so believe it or not, there's probably more room to move to the upside as we compare it to the past. So if past is prologue, there could still be more upside for those three. And if anybody did their due diligence and chose UTS from the last video where I had some suggestions of stock picks, this was a good one to get in when it broke above the base about 1776. So that was right here, and it's been moving up for the next 2 days since breaking the base here. REI is at neutral 0. Their marker 1 and ROC are just sailing away above. They're overbought, and the directional movement index plus is well above minus, and the ADX is just cruising away up there too. The S&P 500 daily chart, looking back to November 2023, it rectified those series of red bars there, trend bars, and it never looked back. Not one red trend bar. Risk levels became qualified and confirmed. The aggressive combo, the sequential qualified and confirmed sell risk, and the combo qualified and confirmed sell risk, and the sequential cluster and combo cluster sell risks printed and price punched above them, so price closed above those risk levels, and they are support at the levels that are shown. And they printed because I have the combo cluster and sequential cluster 13 criteria set very aggressively. And looking back in the S&P 500 weekly chart to that end of November, one red bar, then a black bar, and the rest is just solid green all the way. Nothing is even close to becoming qualified as far as the bars are concerned. Nothing but up closes. So the aggressive sequential sell risk is down here. The combo sell risk here. The sequential sell risk 4969.32, the sequential cluster right above it 4974.24. And the sequential cluster goes back to the top January 2022, and we're now hitting it. And 4 more weeks to print the sell setup 18 recycle count. It makes it there end of day Friday in 4 weeks, and all these 13s and the ones to come will turn to ours for recycle. And if that happens, I'm a buyer on any pullback. It blows this 18 count possibility, and I'm a seller. And there has been volatility this year. You can see a truncated version of the Rock 1 below -1 in December 23, then in January 24 above 1, and then it managed to stay below it and then back above it, came down to the middle underneath at the end of January -1, anything under -1, and then back up above +1, where it is for Monday 1.07. So volatility. ATR2 is above its 50 line, so anything above that and below -1 is serious negative volatility there. Goes the other way too for positive volatility. Above 50, above +1, positive volatility. And this is quite the milestone here, where the PPO Extreme closed above 10 for a couple days in a row. It tried it before, went under, and tried it again. So this 10 level in red here goes back to the COVID crash era, and it certainly has struggled to get above it for a long time. And the S&P 500 daily chart has come out of one bearish divergence, so this long arrow is price pointed up, broke the divergence here on the AD line, and that was right about here when it went above this peak, and now we're back pointed down with price pointed up. Same thing with the MACD. Rectified the divergence here, promptly went back into another one. Same thing with RSI, and the ultimate oscillator is showing a bearish divergence too. And there's the arrow on price anchored at that doji indecision candle, so it decided to go down there and then off to the races, creating this bearish divergence again. And the NYA divergence never became rectified, so it's just getting longer and taller here. Here's price pointed straight up. The ratio adjusted McClellan breadth oscillator pointed down. The ratio adjusted McClellan volume oscillator pointed down. The stocks only 39 EMA and 19 EMA volume oscillator pointed down, and the breadth oscillator for stocks only pointed down, and really having a tough time moving at all. And the TNX CBOE 10-year U.S. Treasury Yield Index, so $TNX on the monthly chart, is now back above the 12-period simple moving average, 20 or so points above that, but nonetheless above it. And this is what Powell and company are trying to avoid, another repeat of the late 70s, early 80s Volcker era. You can see this dip down out of the red zone here for RSI 10, back up, Same thing here, out of the red zone, down here, back up, and back down again out of the red zone. It hit the 50 equilibrium line, so it hasn't done that yet in the current area, but came out of a red area. And luckily the MACD is pointed down, so this is an indication for more possible yield drop instead of rising. RSI and price differ.